Do everything possible to be profitable in the financial market because profitability is sweet. Welcome back to this particular episode of our smart money trading concept. So, this particular episode is going to be talking about the institutional market structure. Have you ever wondered why you analyze the market and it's not going, or why you analyze the market takes you out and then it eventually goes in the direction you've analyzed for? Then this particular video is meant for you. Please do well to hit on the subscribe button, turn on the bell notification so that you stay updated as I'm going to be dropping the complete episode of this series of smart money training concepts. Thank you.
This session is going to be about market structure. That's the fundamental for every trading. So normal market structure that we have is that they tell us that we have what this and normal market structure that we have what we have the expansion, right? This is the expansion, and we have the retracement. This is normal what market structure. This was higher high, higher what higher low. All right. This is higher high, higher low. Right now, so this is the normal what. So this is what normal market structure that we all know, that we find in the textbook, right? So these are breaking market structure. These are our lower low, higher low, right? And these are this is our higher high, right? But one major thing SMC actually brought out to simplify everything for us is that fine and good, this is the normal market structure you will find, and they term this as a retail trader structure. So in the real market maker structure, what is expected is that you have an expansion, right? You have an expansion, rather an expansion, right? You have an expansion. So we have something like this. These are our expansion. Then we have a retracement. Now this eye here, this eye here is not. This is our eye here. This is our higher eye, and this is our higher low. Now, before any of this, so we assume this is an uptrend, right? We assume that this is an uptrend. Now, this eye, this our higher eye now is not confirmed yet. Nobody is the this is our higher eye. Now, before this low could be confirmed, or this higher high could be confirmed now, for this higher high to be confirmed, right? We know that the market will break this higher high, right? So this is our breaking market structure, right? And this is our low. Now, before we can confirm the higher high, right? So if you look at the market, you have something like this, a retracement, and you have a continuation like this, right? So many people will label this as our higher high. Of course, indeed, it is not it is not our higher high. Right? That is not our higher high. Many people will label this as our higher high, right? And this as our lower low, higher low. Yes or no?
Yeah.
Now,
Yes.
what majority would do, right? But as far as SMC is concerned, this is not our This is not our higher high, right? This is not our higher high. Our higher high is confirmed. Take note of this. Before you can have the higher high, the highest point the market has traveled, they must take out a liquidity, right? They must take out a liquidity, and there is no liquidity they are taking other than other than the internal liquidity, right? When we get there, we'll do justice to that. Now, for this higher high, to be confirmed as our what, as our higher high, they need to come back and take out a previous low. In an uptrend, they must take out a what, a previous low. While in a downtrend, they must take out a previous high, the most recent high. Now this higher high now this higher high, now this higher high, this higher high now we have now we have something like this as well. Now you all agree that they've taken out this our last low, yes or no?
Yeah.
Now this is our,
Yes.
when they take out this our recent low here, that this higher high, this is now this is our real high. This is our real higher higher high, right? This is our higher high, right? So after they've taken out this higher high, now it is assumed that that now we are in a in an uptrend, and we can continue the the movement of to take out the this higher high. Now taking out this higher low, this previous higher low, now many people will see it before that. So once they now have this higher low, right? We have this as our as our recent low. Right now, before this higher high could be confirmed, I said they must take out the the liquidity there. Now they must take out the the liquidity here now. So once you have something like this, right? Many people in the market will see this as a as a change in market structure. Yes or no?
Yes.
Yes, sir.
That is the that is the retail way of seeing the market. Your banks will not see the market as like as this. Your bank will not see the market as this. Now it is the bank will not come into the market until when liquidity is taken out. Right now, this first low is what we call inducement. The most recent low after a break in market structure is what we call our inducement. The most recent low after a break in market structure is what we call our inducement. Right? So at least before you can have a confirmed higher high, market was they must be able to take out the previous low. This is our inducement here. This is our inducement. This is our inducement. Let me just idea. This is our idea. Right, so they must take out the inducement before you can have a confirmed higher high. Right now, once they take out this lower low now, you see this as a as a change in market structure, meaning that the market is coming to come out to is changing from an uptrend to a downtrend, whereas it's just a liquidity grab, right? It's just a liquidity grab. Now, for every break in market structure, it must be a candle close. Take note of that. It must be a candle close. And so once they take out this inducement now, market cannot continue the movement. So you have something like this, right? Something like this. In actual market, this is what you will have. Right? So they will now they will take out this our higher high here, right? They will not take out this our higher high here. But many people, once they see this, they believe this is a change in market structure from from an uptrend to a downtrend. But in real life, it is not a change in market structure. And many people will actually mark this low as our inducement. And now this is the first low is our inducement, while the most recent the next low after the low, this is our coach a change in character. If market should take out this low here, if they should take out this low, this is our low here, that means this is our coach, right? This is our coach. So this is the low. We are not expecting them to what to take out. See, see, these are change of character. These are our real change of what character. So we are not expecting them to what to take out this low. Once they take out this low, that means we are switching from what from an uptrend to what to a downtrend. So for your higher high to be confirmed, market must what must take out the recent low to confirm your what your higher high. Is after then you can now have a what a real break in market structure. So this high here is what is liquidity. It is not the real high. That's why I'm using the word X sign to denote the word the liquidity. So after this now, for this higher high to be confirmed now, they must take out the what? Where's our inducement?
Where you have your pen?
The most recent low.
This is our what? This is our
The
inducement.
most recent low.
Right. So for us to continue this our what? Now this is our what? This is our inducement. Now for them to what? Where's our coach?
It's below the low.
This?
Below the most recent low.
Where's our coach? Is it this?
Which one?
Is it
The
our,
one below the inducement.
this is don't forget this is our inducement. So this let me label it as what as X. And let me use the timestamp. This is our inducement. I'm sorry.
No.
This is our inducement.
The first symbol is the inducement.
This is our inducement. Yes or no?
Yes, yes.
Now where's our low? Where's our change of character?
That will be the last one. The last one.
Please, I'll be waiting for your review in the comment section. If you enjoyed this series, please do wait to comment in the comment section, and don't forget to hit on subscribe button and turn on the bell notification. So if you need a part 2, let me know in the comment section. Comment part 2 in the comment section. See you guys.